And hi there, I'm Dennis Hudson at orangequant.com. The time is 2:43 in the afternoon in the market, Eastern Time, on a Tuesday, February 23rd, 2010. And we're going to talk about this inflection that we had yesterday and what might be coming forward. Stay with me. Alrighty. Well, we had super vindication there on Monday's inflection, and I'm going to show you that here. And I hope to be able to show you something extra about synthetic trend lines, because those were included in that forecast that created this whole forecast. The synthetics did. Okay, here's the forecast we made about 10 days ago. And you can see that Monday the 22nd was called as an inflection, and indeed today it was. We blew the Thursday inflection. It was not an inflection. We've already talked about that. Thursday was sort of a minor chord, you might say. This is like a musical score in many ways. But before I forget, I want to say this. I said something about something extra about synthetics. I want to point out this point right here that I'm circling in green. Let me make it really dark green for you so you can really see it. That Thursday inflection there, you'll notice that that it's sitting right there on this dark blue synthetic trend line, which I said was an expiring synthetic. And what happened, and I pointed out that when price did dip after the Monday, after the inflection on the 22nd, that it would probably use that as a support line. Now, take note of what I'm about to show you. Here's Monday the 22nd, and just to the right of it would be Tuesday. I'm going to draw a line here, a green line. And you see where that line is going? Okay, and the dark blue synthetic trend line, that would place this at about 110 as support on this SPY. So take note of that, because I'm going to switch screens right quick and show you what actually happened. We got down to about 109.60 or 109.40, somewhere in there. So it did use it. It's going to probably oscillate around that old synthetic. And hold on, I said I'd make it 110. Actually, that green line, if you extend it, comes down right about to 109.60. Okay? So, just something to know about synthetics. And when we mark an inflection on a synthetic where the trend lines intersect, it doesn't necessarily mean that's where price will be that day. I've pointed this out before. The synthetic is simply sort of a true line, what you call a mean path. Okay, so what happened? We had the inflection called for Monday, that was yesterday, and what we got for today, again, was, okay, this was the Monday over here. I'm going to circle that in red for us. That was the Monday, and today is Tuesday, and you see what happened. Bam, 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 all the way down like that. And as I pointed out before, had you got in, this is now, we're looking back into part of last week, had you jumped in right here on Thursday, I put out a note, an alert, and I'm circling where it was that I put out the alert. Right about there, you'd have been in at about 110.40, 110.50. You would have ridden that down. I said in a Monday note that you should hold on. In fact, I think I said it on Friday too. Hold on, because your day is going to come real soon, and sure enough it did. So you took some hits. If you went in short here, you took a bit of a hit going to the upside a little bit, up around in this region. And then after that, you know, Monday just kind of hung around and finally crashed on Tuesday, and you made plenty of money. If you were an options trader, I pointed out also that The Friday would have shaken you pretty badly, and so would Monday. You probably just basically got wiped out. Not wiped out, but your the value of your puts would have gone to pretty nearly zero, maybe. But I said hold on, and with the precipitous drop on Tuesday that we got today, those puts probably became they certainly became quite valuable, because you went down really fast, well below your entry point. But option players understand this. You can be rich one minute and poor the next, and then come back and be rich again. Now, what the future looks like, this dark blue trend line is expiring. Also expiring are these other trend lines. All of these trend lines are now expiring because of the inflection we had Monday. It changes the game. However, I would still expect price to kind of oscillate near to or around this dark blue trend line for another day or two. The thing is, we may be in for a whipsaw. I'm not sure how strong the market is. I'm thinking the bulls are going to put up a bit of a fight, but from a technical perspective, a quantitative perspective, we should be really expecting price to yearn for and stretch up to this lower yellow trend line again, at least. And so you want to be careful. Today, Tuesday, today I would take the money and run right now, whatever you have, and get out and then just eyeball the market tomorrow. You can always get back in. But then I'm kind of a wimp about giving up profits. You know, I like to take my profits when they're on the table. You, on the other hand, may be a high roller and you don't care, but I'm telling you, the price, although it could dip some more, it's going to yearn back into that towards that yellow trend line for a bit, even though that yellow trend line is starting to expire. Okay, I'm Dennis Hudson, your host at orangequant.com. You want to get the FLIR 2 ebook so you can do this for yourself in stocks and Forex. And just to have the last laugh on today, I just want to show you what happened. That arrow, see that arrow? Okay, you're rich, and guess what? I think, based on today's action, I am joining you. Alrighty, you have a nice evening, and we'll see you later in the week.